Bonjour, good morning. It's with a great pleasure that we are launching the next season of our Green Hub TV broadcasting. As some of you may remember, we launched and inaugurated our Green Hub TV at our at Natixis CAB Green Summit back in November with a live studio on site. Today is the first edition of our now monthly broadcasting. Along with the rest of Natixis CAB Green Hub TV editorial team, we're happy to open our new season of 30 minutes broadcast TV sessions focused on specific sustainability topic. We will be examining some news stories, gain insights from experts into key topical sustainability issues, and engage into stimulating discussions with internal or external guests. You can find our Green Hub TV channel on YouTube and find there already available Green Hub TV broadcast replays. Moving on to the highlights of the month. The first news we decided to share with you this month is on April 3rd, the launch of Avoided Emission Platform, the AEP, which is intending to harmonize the assessment of climate solutions impact. Founded by Mirova, Robeco and Edmond Rothschild, supported by some 30 initial funders that are financial institutions, corporate or data providers, including ourselves at Natixis CAB, AEP is a platform offering avoided emission factors for 65 low-carbon technologies and refined according to many parameters in a very interactive tool, allowing both an expert and a standard mode. Avoided emission, also referred to as Scope 4, are a very effective way to quantify the positive impact of low-carbon products or services compared to the current market. It allows to value the impact of the so-called enablers, be they corporates or projects, manufacturers or installators of low-carbon products and services. However, there is absolutely no harmonized methodology for calculating these avoided emission factors, just the same way we have methodologies for induced emission factors. This is what this platform is about. And the idea was to have a global platform by employing a very transparent methodology of calculation. iCare by Bearing Point and Quantis, a BCG company, have been appointed by the initial founders group to develop this platform with the validation of a scientific committee composed of experts of that very matter, such as ADEME, WBCSD, Raw Impact, Prime Coalition, or Climate Dividends. They will continue to operate and expand the platform in the coming months, increasing the number of emission factors available and also constantly updating the latest available data. A particularly relevant topic in the context of the recent publication by ICMA, Green Bond Principles, of its Green Enabling Project Guidance. Moving on to the next news items we wanted to highlight. Two interesting developments observed on the green bond markets. One, greenium seems to be kicking back. According to Bloomberg, sustainable bonds in EMEA were tighter at the end of March versus comparable conventional bonds, with four sectors which had a greenium led by healthcare and energy, a trend that we could well see extend throughout 2025. A fresh example of which is the Veolia green bond issuance last week with a greenium estimated to 5 bips. The second trend we're seeing on the green bond market is the emergence of EU green bond issuances, with already 5 issuance since the beginning of the year, starting with A2A, which was the first mover, but also with the 3 billion giga issuance by EIB in April. And that's not counting all the likely issuances that we should be expecting, considering the number of frameworks that we have seen recently updated that included an EU green bond fact sheet. It's just an interesting trend considering the current uncertainties with regards to the future role the European Commission will want to give to the European taxonomy. Third news we wanted to share with you is more of a perspective on contrasted announcement we have seen on the oil and gas majors on low carbon strategies. Last week, the FT reported that Exxon is planning $30 billion expenditures on low carbon opportunities by 2030. That's much higher than its previous plan announced in 2021, which was speaking about $3 billion. We're talking about CCUS, biofuels, hydrogen, and lithium extraction. Unless from its peers, Exxon never went down the route of renewable energy. Obviously, the ability of Exxon to deliver on that guidance will depend on the US government's sustained subsidies and customer demand. In February this year, BP announced what it has called a fundamental reset of its strategy, in which it announced they are set to increase their investment in oil and gas by $10 billion a year till 2027, while cutting investment in energy transition business by more than $5 billion annually, with a focus on biogas, biofuel, and EV charging. The new plan is also announcing a revision of a number of its carbon targets, with a reduction of Scope 1 and 2 and the net carbon intensity being reviewed. But more interestingly, the pure and simple cancellation of their Scope 3 targets, as well as their targets on most of their transition levers, be it renewable, EV charging, hydrogen, or bioenergy. During the last AGM, BP announced that its VP for Sustainability will step down on June 1st and not being replaced. All of this doesn't come as a surprise, but it did trigger quite significant investor reactions. On March 27, TotalEnergies published its Sustainability and Climate 2025 Progress Report, reaffirming its multi-energy strategy anchored on two pillars: oil and gas with a focus on LNG, and power, especially renewable. On the carbon front, it's beating its Scope 1 and 2 emission targets for 2024, and it reinforced its 2025 original targets, keeping its Scope 3 emissions targets unchanged. 25% of TotalEnergies CapEx plan will continue in 2025 to be dedicated to what they call low carbon energy. We could obviously go on within this sector. Those are only few examples of interesting contrast between oil and gas players when it comes to their climate and low carbon energy strategy. But what we believe is they are a very vibrant symptom of the current contrasted transition momentum and ambivalent environmental strategies. Last, we wanted to share with you the figure of the month. It's a simple figure, 0. That's the flat sales of new passenger electric vehicle in Europe in 2024 versus 2023, to be compared with plus 10% in the US, plus 20% in China, and plus 25% in the rest of the world. So current contrasted transition momentum and ambivalent strategy environment, as we said, that's between players, between sectors, between geographies. Let's deep dive in the current vibes when it comes to ESG, sustainability, sustainable finance, and more broadly, transition, and discuss what some may mix and mash into the sustainability backlash hat word. Our expert today will try and help us decipher, sort, understand what it is all about. We're happy to welcome Cédric Merle, Head of Green Hubs at Center of Expertise and Innovation. Cédric will share with us his expert insight on the so-called sustainability backlash phenomenon. Cédric, shall we start with the beginning? Can you help us understand the notion of backlash? How would you define it? Are we talking about ESG, sustainability, sustainable finance, energy transition backlash or backlashes?
Thank you, Orith, for having me. And this is true that the so-called ESG / sustainability / sustainable finance backlash is making the headlines. It's a bit of a buzzword, so it's super important to define it. What does it refer to? In a simple terms, it refers to the rather hostile reaction against something. It occurs most of the time in response to a change, a transformation, an agenda, a decision, or a trend. So it's a bit of a causal reactions, and it happens when something is deemed to have been too far, too fast, too much, and being too demanding. So it means that the audience or the recipient of climate action, in our example, are more reluctant. For some of them are fiercely opposed to the ongoing transformations. So there is, it means that there might be less support, less momentum regarding what is requested from them. And this is really mixing various sentiments. Sometimes it's more a bit of fatigue. We heard about disclosure fatigue, and in other instances, notably in the US, following the election of President Donald Trump, were really about an anti and a strong fight against ESG and various forms of sustainability. So this is a phenomenon unleashed as a result of transformation, and there is nothing really new in the notion. It has been used regarding progress, regarding women's rights, and even when we talk about sustainability, back in 1970, one of the headlines of the New York Times was about the environmental backlash.
What is that backlash about? Is it ESG? Is it sustainability? Is it transition? What is it?
Yes. So how can we decipher these very notions? Depends of various perspectives. Which standpoint we are talking about? Who is backlashing what and why? So we need to take into account the grievances from some policymakers, from some customers, from a financial watchdog, and it really depends. They don't have the same reactions vis-à-vis sustainability. And sometimes it's indeed about the transition itself, some measures. Let's say, for instance, the ban on the sales of internal combustion engines. Sometimes it's more about a carbon tax, a carbon pricing. Sometimes it's on the very essence of diversity policies. So this is a bit of a mix-up, and it really depends on the stakeholders. And we also observe nuances depending on the maturity and legacy of the actors vis-à-vis sustainability. This is a striking fact. Above that, what matters is the geographies. As you rightly said, with the number of demands, depends on the firm country, but also on the country or continent. What is taking place in India or Southeast Asia is very different from what is taking place in Europe. So the who and the where strongly matter. Another key criteria is the sector. There are some sectors where there is, I would say, low positions and big progress, while in others there are strong bottlenecks and pushback. So if we are talking about aviation, automotive, power sectors, it really varies a lot. But when it comes to the very notion of pushing back, retreating, we need to look also at the commitment of actors vis-à-vis sustainability. So most of them, at the very moment, they remain committed to the Paris Agreement and to well below 2 degrees trajectories. There is a bit of climate denial and sustainability oppositions, but luckily it remains rather small and a minority stance. There is also a lot of buzzword and confusion, so climate, ESG, social finance, but also about the domains or the areas of backlash. You all have heard about the CSRD omnibus to streamline and to reduce the disclosure, but there are other signs of backlash related to greenhouse gas emission, so the performance. We have seen some announcement on the targets, forward-looking targets being cancelled, postponed. We have seen also announcements regarding investment and efforts. BP, for instance, indeed slashes its renewable investments. Sometimes it's more subtle. It's about claims. So actors keep transitioning their business model, but they are more discreet. They don't pledge anymore, and they turn down their communication.
That's the greenwashing effect.
That's the greenwashing effect, indeed. And a lot of emphasis have been on the INCs, with American, Canadian, and Japanese bank exiting the Net Zero Banking Alliance and its equivalent. This is only a part of a broader phenomenon.
It seems to me that this backlash semantics, because that's what's been used, is more importantly and probably more significantly hiding a broader transition status or outlook. Isn't it all about taking stock of the transition pace in which we are? How does it fit into the transition, I would say, real life happening?
That's a mix, meaning that some stances are driven by the backlash and by the fear of anti-woke accusations, legal probes, etc., etc. And in other instances, the recalibration of the target, the dropping of some disclosure, the change in semantics is more related to the fundamentals of the transition, especially on the technological development and cost competitiveness of some clean solutions. So there are multiple drivers. Can be political, can be also customer demand. In some instances, there is a slower uptake when it comes to the demand. So it's super important to unfold those different drivers. And the backlash is an adverse dynamic, among others, which are more favorable and others are a bit ambivalent. And what really matters is to look at the motivations. When a firm decides to restate a target, to reduce transition capex, etc., on which grounds and on which basis it's being done. In some instances, it's for competitiveness or supply security concerns that are competing with decarbonization. That's super important because due to the various crises, the return of war in Europe, the inflation crisis, the sustainability as a top priority has been a bit accommodated and giving more impetus. It doesn't mean that sustainability is abandoned, that climate transition is no longer a priority, but it needs to coexist with other dynamics.
What can be learned and adapted to curb that backlash, if we decide to call it that way?
Yeah, because beyond the political oppositions, there are things that have been done in an improper way. Both from a policymaker standpoint, but also from a financing standpoint or corporate standpoints. But first and foremost, we need to have a balanced diagnosis of the backlash to draw the appropriate lessons. So it's undeniable. There are signs of slowing down, effort reductions, slowing down on the decarbonization of some technologies, and it goes beyond Trump. It existed before Trump, and it will continue. But we should not misrepresent the backlash. So there are fantasies, and there's a mix-up. We should not consider that ESG in itself and social finance and the transition are undergoing the same dynamics. And we have counterexamples.
Such as?
Total Energy, that you just mentioned, strengthening its methane emission target, strengthening its target on the carbon intensity of sold products. On the political front, we have Marc as a new Prime Minister of Canada. A firm like L'Oréal, they reaffirm their commitments. On the smooth finance ground, we have seen a new framework from new inaugural issuances. And of course, it's the elephant in the room, what is taking place in China. For the first time ever, the clean power supply is evicting a coal out of the grid. So this is probably the information that the peak, the fossil fuel peak has been reached. The figures on EV in China are astonishing. The mandatory disclosure on China is following the same path, and in other countries, India, Singapore. So in other parts of the world, there are counterexamples. So that's super important. And we should be, that's another finding, so the backlash is undeniable, misrepresented, and we should introduce nuances. There is a difference between making a pause, restating a target, streamlining a bit of strategy, versus retreating, dropping commitments, phasing out sectoral policies. We need nuances to also anticipate what are the consequences of those announcements. And we should face the reality. There are some, I would say, worrying decisions. Let me take an example. For instance, Bank of America dropping its pledge to stop financing coal mining and coal power generation and Arctic drilling. Asset manager like HSBC putting a pause on its finance emission targets. Some car makers postponing or dropping their targets like Porsche. So this is super important. And what we observe is that within sectors, there are discrepant strategies. Let's say that the forerunners, the most committed, they keep the pace. In some instances, they intensify and they scale up the efforts, while the laggards, some of them, opportunistically, they waive efforts. So it's nuanced, it's contrasted by type of factor, by type of technologies, and it should not be misinterpreted. Sometimes conclusions are drawn on some figures, outflow of ESG funds, lower EV sales, etc. We should not mix up the causes and the consequences. And in the end, there might be some virtue in this backlash. How can we do things differently? It calls for adjustments in the policy making area, possibly less incentives, less carrots. A disclosure, maybe a streamlined disclosure focusing on highly material aspects, and above all, the articulation between sustainability, security of supply, and some geopolitical considerations.
Cédric will be discussing his view with Marc Lavaud. Thank you, Marc, for being with us. Marc is a climate-specialized sell-side analyst at ODDO BHF. Marc, welcome. We're aiming at this to be a very interactive discussion, so please step in, both of you, as much as you want at any time. Marc, let me start with you. What's your take on this? Are you aligned with that proposed diagnosis?
Yes, totally. So very aligned with everything that Cédric just said. I think first and foremost, it's difficult to deny that there's no backlash. So there's definitely a backlash if you look at it from a very global perspective. But then there are nuances, mainly from a geographical standpoint and from a sector standpoint. So if you first take the geographical standpoint, the backlash is very strong in the US, and it actually started there and it's still going on there. It kind of traveled to the EU, so it takes a different form, but it's still present in the EU, although it's less strong. And as Cédric mentioned, I think in China it's difficult to talk about any backlash. If it wasn't sufficient, what China was doing in the past 5-6 years, it's still maintaining the course, and we don't see any deceleration in any form. And if we look at the sectors now, even for a sector like wind, for instance, which oftentimes is viewed as kind of a symbol of the backlash, if you look at wind capacity additions in the past 10 years, capacity actually doubled from 2014 to 2023 practically, and even 2024 in terms of capacity installations was a record. The previous record was actually 2023. So the growth is not as strong as it was in the past, but it's still pretty significant. And if we look at solar, for instance, to take another technology that's pretty symbolic in the whole energy transition, here the dynamic is just explosive. I mean, the solar installations in 2024 were around 550 gigawatts, 600 gigawatts or something. And the growth in the past 10 years have been 30% compound annual growth rate. So growth is exceptional, and it's just not only in China, it's all around the world, and also
including in the US.
Including in the US, including in very red states like Texas, for instance, and even in emerging markets. So the trend is here, and even for other technologies like batteries, for instance. You mentioned earlier what's happening with electric vehicles in China, but even in the US or in Europe. Well, there are some kind of cross-fertilization between EVs and stationary storage, so there are huge cost drops. And because of this, the growth is following for batteries what it was in solar in the past 4 or 5 years, let's say.
Cédric, you've mentioned a or deprioritization rather than an actual uniform, unanimous backlash, and what Marc just said is also quite symbolic of it. Are transition or sustainability-related topics conflicting with the new priorities, such as sovereignty, competitiveness, inflation, security? What is the geopolitical content in this trend?
Yeah, that's the new recipe which is necessary. It's normal that the support, the consensus towards the energy transition is gonna fluctuate over time because there are other factors, competing concerns. So the whole challenge for policymakers, but also for corporates and investors, is to articulate both. And there are some investment strategy, there are some technologies avenues which bring economic benefits by themselves. Because some technologies, renewable electricity from renewable was mentioned, is cost competitive and can improve the security of supply because we import fossil fuels, especially in Europe. So you can improve your trade balance, you can repatriate and build industrial capacities by reshoring and decarbonizing. So that's the next frontier. Co-benefits. Indeed, decarbonizations, but also curbing inflations and bringing back jobs. So that's very compelling. These new, I would say, these new situations is a bit captured, for instance, by BNEF, who created a new scenario, economic transition scenario, where transition investment are not primarily driven by the decarbonization, but by supply security concerns, cost competitiveness, and so on. And a good sustainability performance can really be an asset, a competitive asset.
I guess that's the optimist side of the coin. Marc, behind that perception of backlash that we have started to discuss today, there is often a reality, which is the market players are just confronting themselves with the tough reality check on their fundamental transitions. Its pace, its consistency, its magnitude, and sometimes even a setback. And in any way, very far away from where it needs to be. Can you give us a few examples or at least shed some light on what we are seeing as the most worrying signs of slowdown, of reset, of pause of the actual transition, and on the opposite, where the transition dynamics is still vivid? You've mentioned on the power side, but in any other areas?
Sure. So I think the first thing to note here is that not every sign of slowdown is necessarily bad news. So if we take the example that you mentioned in the introduction, the oil and gas sector, for instance. So you had basically 3 Northern Europe companies which decided to scale back their investments in the energy transition, which are BP, Shell, and Equinor. And that dates back to 2023. It's actually not new for BP, for instance. In January of 2023, it already announced that it was actually scaling back on the ambitions it had on lower oil and gas production, which were targets that it gave in 2020. So that actually could be seen as the first consequences of the global energy crisis and what was happening in Ukraine. And then in June 2023, you already had Shell also, which decided to actually, I mean, that's something that was in the first half of 2023. They decided to sell many of their clean energy businesses. And then at their investor day in June, they just announced that they would have lower targets for internal rate of return hurdle rates for oil and gas investments, basically, and bringing them very close to clean energy internal rate of return hurdle rates. So basically meaning that they were going to invest much less versus the past in clean energy and more in hydrocarbons. So that's the first thing. And then you have Equinor, which announced a few months ago that it would scale back on this investment target that they had by 2030 to invest 50% roughly of their capex in clean energy. So these are the three companies. And then the most quote-unquote spectacular thing that happened in the oil and gas sector recently is, of course, BP. And the scaling back here is pretty huge. They announced that they would simply cancel, as you mentioned, their Scope 3 targets. They would actually grow their oil and gas production instead of lower oil and gas production by 2030. And in terms of investment in clean energy, it was supposed to be $7 billion per year. And now it's between $1 and $2 billion per year. So that's, of course, a huge change. But if you look at what's happening in this kind of southern part of Europe, and here I put also TotalEnergies, which you mentioned earlier, that's actually a very different picture because most of the players here are actually maintaining their course. So if you look at the investments that they announced in 2021, 2022, they gave a range of investments in clean energy. So it was 25% of capex in clean energy to a bit more than 30%. We may be in the lower half of the range, but still, they are in this range. And in that sense, there's a difference in the oil and gas sector. Then another sector that's interesting to analyze is the automotive sector, actually. And I'm coming back on this figure that you mentioned in the introduction, which is very interesting. So in the EU, if you look at the growth year on year of EV sales between 2024 and 2023, it's actually zero. There are a few reasons for this. The first one is actually higher interest rates. Because with higher interest rates, debt is more expensive, and as a consumer, it's more expensive to buy an EV versus an internal combustion vehicle. That's the first reason. The second reason is actually that a few European countries decided to actually cancel incentives for the purchase of EVs. So that was the case for Germany in the end of 2023. To a certain extent, that was the case of France, still the case of France and of several other European countries. And of course, EVs are more expensive to buy. The upfront cost is actually higher for EVs versus ICE in today. But I mean, still, it might be we might reach price parity in 4 or 5 years. So basically, we will need some incentives for 4 or 5 years, and then maybe we won't. And then the third reason, I think, is the most interesting one for Europe, and it's actually the fact that this slowdown may have been baked into the regulation. If you look at the CO2 regulation for cars in the EU, the kind of lower emissions that car makers have to have for the sale of their electric vehicles or even of their cars overall is not progressive. It actually takes the form of a staircase. So basically, they have to have a certain average between 2012 or 2015 to 2019, 2020, and then another average between 2019 and 2024, and then there's a big step change in 2025. So if you take the perspective of a car maker, you don't have much incentive, so to say, to sell and go faster than the regulation. The incentive that you have is really to kind of have a slowdown in 2024, and then give everything you have, basically, to technically sell more EVs in 2025 than in 2024. So I wouldn't kind of overinterpret the data for 2024. And today we are seeing that at Q1 of 2025, it's plus 25% for the sale of EVs in the EU.
That's interesting.
Yeah.
I think you're giving me the opportunity to step in on the public policy side. What about governments? And I'm asking to both of you: are they up to that challenge? Aren't they paralyzed by the mounting public sentiment, taking the measure of, and have for the last few years, of the political and social dimension of that transition? Maybe Cédric, you can start.
The polls and the election last year showed that there is less support towards sustainability and environment, and the policymakers have been a bit following without drawing the proper lessons about policy designs. So there's a lack of certainty and visibility for private firms, and there is a need probably to not to scrap the disclosure scheme, but to complement it with incentives. So financial awards, public procurement, tax benefits for best transitioners, and also for the low-income households to accompany the adoption of clean technologies. So we all know that fiscal resources are scarce, so they should really be prioritized to some technologies that are showing slow progress, namely hydrogen, green steel, carbon capture, and so on. There are some technologies that without support, they won't reach cost competitiveness and be scaled up. And it should be articulated possibly with trade policies. We cannot put European firms at a competitive disadvantage because of sustainability criteria. So rather than waiving the sustainability ambition, we should build a fair level playing field. At least that's what European firms are expecting.
Maybe, Marc, to close up our discussion, you can give us a bit of a sense of what you're witnessing on the investor front. You're speaking with investors all day long as a sell-side analyst. How much of that backlash does exist within the investor base you're speaking to, and are we seeing any concern signals on the investors' demand side for sustainability or any fundamentally revised investment strategy? If you can give us a bit of your observation.
Yes, so I think the first thing here is to look at the data. So that's something that you mentioned earlier. If you look at the data for the flows of sustainable funds, well, in the US, you've been seeing for 2-3 years outflows from sustainable funds. That's a trend that's here, and again, it comes back to the backlash that is stronger there. There's a bit of another sign in the EU. We actually saw inflows in the past 2 to 3 years, with the exception of Q1 of 2025, where we saw a small outflow of sustainability funds. We'll see if it's structural. Maybe it's not. Maybe it's just a dip, and then it will come back in the future. Other signs that I think are interesting is the kind of split that you're starting to see between asset owners and asset managers. Basically, you had some communications and press releases from asset owners like People's Pension in the UK, New York City Pension Fund, even in the US, CalPERS, of course, in the US, which were basically saying that they wanted their clients, asset managers, to stay the course on climate and even sustainability overall. And looking at it from a very kind of practical and concrete perspective, it's normal because it's more in their kind of selfish interest to take this into account, because climate-related financial risks are going to affect them much more than their asset managers, because they're more long-term investors, and climate-related financial risk is a long-term risk. So you can see that asset owners are actually putting a bit of more pressure on asset managers on this. And then another thing that's very specific to the EU is actually that the ESMA rules on fund naming are actually bringing more clarity and maybe less greenwashing.
But also volatility on the inflows, outflows count.
Yes, definitely. And most asset managers we talk to say that it's actually good news for the ones that started early, or at least were the most serious. Because the ones that were actually kind of surfing the wave between 2020, 2022, 2023, let's say, who were the least serious, so to say, are actually the first ones to retreat. And now you kind of have a clarification, and if you want to see the glass half full here, it's definitely a good sign to actually see who is the most serious and actually doing what must be done in terms of sustainability overall, actually.
Taking the opportunity to close up on the a glass half full. Thank you both for this very insightful discussion. All of our Green Hub TV replays are available on our YouTube channel. Thank you very much, and see you in a bit.